What's going on, guys? Before we get into this video, I wanted to say thank you because this video that I have up here, the Alibaba video that I posted a few videos ago, about a week ago, it's just been popping off. We've got 25 new subscribers and over 2.4 video views, and this is crazy. I just really appreciate the support from you guys lately and for dropping likes and everything that you guys have done. So if you're a new face here, say hi down in the comments below. I'll make sure to reply. Otherwise, I hope you enjoy this video. In this video, we're going to talk about a stock that I have been very interested in. It's kind of just caught my eye, and I've been watching it and looking at it, trying to run some research on it, and there's still so much more that I need to do before I put any money into this stock. I haven't invested in this, but we're talking about PayPal Holdings today, and we're going to go over kind of a valuation, look at the value, and specifically look at the value and how the stock has progressed over the last year. So I hope you enjoy the video. If you do, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. So the first thing up here, we are going to look at the chart, and basically what you can see is it's just been terrible for PayPal. So PayPal is down all the way down to 103. And we see some kind of support in here, which is very interesting. You'll see later in the video, if you stick around to the very end, how this level is very, very interesting for the chart, because it's just sitting here around the 180, 190. And again, we'll get into that later in the video, but this is very interesting. And over the last year, we've seen the stock run all the way up to 300, which would be a 3x of where we're at right now. But the question is, and what we're going to get into in this video, is was PayPal worth it at $300? If you were buying around this point, did you buy kind of in a smart area, or was it overvalued? Was it undervalued? Where kind of was everything at? If we look at the 5-year chart, which again is very interesting, is back in 2020, right? We had the huge dip with the kind of recession concerns and everything coming up in there, and then the stock just went on a tear as people started buying things online, whatever it may be. So really, it seems like there's a lot of kind of high valuation around the stock in here, and then relatively kind of normal valuation in the stock back in here. Again, we'll get into that later in the video, but let's start looking at some of the valuation metrics around PayPal. So we are going to use our normal calculator. And what I mean, our normal calculator, I use this in almost all my valuation videos. And basically we're looking at PE ratio, where it's at currently, and then where we could see it going based off basically where it's been in the past and other comparison companies. So here we have PayPal, we have Visa, and we have MasterCard, and we're looking at basically the valuations compared to each. So if we jump over here, we can see on Yahoo Finance that the forward PE ratio for PayPal is 24.57. So we've added that in here to this box. And then what we have next is this 45 number. And this is where we get very interesting data, because when we look at the PE ratio over the last 5 years, so we have 5 years, this is by Y charts, and basically you can see that what we were talking about earlier in the very intro is the PE ratio started skyrocketing after 2020, after the huge dip in March. And what we've seen over the last kind of 2 years is a PE ratio that's kind of been inflated. So we've seen the valuation actually go all the way up to almost 110 PE ratio, and then basically just back off from there. And it's just been driven down further and further. Some of this has to do with them having good earnings growth over this period, but also the stock has kind of pulled back right in the last year. So really, and that point that I was talking about where you're seeing a very key kind of metric was right in here, right? So this is where that stock, where PayPal was hitting the valuation of, or a stock price of around $190. And why that's important is basically what we're seeing here previously is the stock had a valuation and was kind of bouncing in that range of 40 to 50, even almost up to 60, kind of 60 in here for PE ratio. So what that's telling me is really the stock was almost fairly valued and relative to its previous self at this point. And what we'll see in the numbers when we run the numbers is that that kind of shows to be true. So basically what we've done and what I've kind of looked at is around here, you can see that the PE ratio was kept around 45. And then down in here, it was also around 45. So that seems to be a fair value for the company. So when we jump back in here, right, we input 45 here, and we can output a price target for PayPal. And what that comes out to when we run this math, which I'll highlight here, basically, again, we're taking the current price of PayPal, we're multiplying it by its potential PE ratio, and then dividing it by its current forward PE ratio. And what we're getting from that is a very interesting number of almost $190, which represents almost a 85% return here from the current price. But again, looking at the stock, and when we jump back over to the 1-year chart, if it loads up here, and what we've got, and you can see, is this very interesting time where the stock was valued around basically 45, and that seems to be right where it has been valued in the past. So even back in here, the PE ratio was valued around 45. So in my opinion, this is actually a very fair price for the stock of that kind of $185, $190 range. The other thing I always like doing is comparing a stock to other stocks within its industry. So we can all kind of agree that PayPal is comparable to Visa and MasterCard. Visa and MasterCard have a lot more established marketplaces, right? People are more kind of just have a Visa card in their wallet, don't think twice about it. PayPal is kind of a growth company that's getting into the market. They have Venmo as well as a lot of other kind of pay apps. So they're kind of have a lot of growth in front of them where they can catch up to Visa and MasterCard, but Visa and MasterCard are really the number 1 and number 2 players in the market. I think Visa being 1 and MasterCard being 2. So what we can do, again, they should command, PayPal should command a slightly higher valuation PE ratio because they have more growth potential going forward, but it's always good to look at how they compare if they were to basically level off and have a PE ratio that is similar to Visa or MasterCard. So right now, Visa has a forward PE of 31.55, which we can see here on Yahoo Finance. You have forward PE ratio 31.55. So if we jump back over here and we run the same calculation in comparison to Visa, we can see that we're actually only have a price target of $133.10. So this is still a great return. You're looking at 28%, but it is obviously significantly lower than this $180 price target. So now let's look at the same thing, but for MasterCard. So on MasterCard, we have a 35.59, again, taken from Yahoo Finance. You have a forward P ratio of 35.59. And if we jump back over here, we can uncover what the price target will kind of be there, and the price target there is $150.14, which would be a 44.85% return. So again, MasterCard and Visa don't have as much growth going forward as PayPal. So PayPal it's a lot better to probably compare it to itself, but even if you're looking at these kind of lower valuations, you can see that you still have a fairly significant amount of upside. And the last thing I love looking at is basically how analysts are seeing the stock. So here we have the Wall Street Journal, and we can see basically all the analysts, their ratings on the stock. So right now we have 31 analysts saying buy, we have 6 saying overweight, we have 11 saying hold, and then 1 saying sell. And if we look kind of over the last few months, you can see how it's kind of changed over time. It looks like we've lost kind of a few analysts from buy, and most of them have moved down to hold, and really none have changed to sell, which is overall positive. Having analysts obviously say to sell a stock is never a good thing. But what we're really interested in is this. So these are the price targets for the analysts. So you can see an analyst has a high price target of $330. That's very bullish. We have a medium price target of $190 and a low price target of $110 with an average of $186.52. So really what's very interesting to me is this average and this median. Both of those are in that range. So it's almost like these analysts are using the same metric. They're looking at PayPal, and they're saying that basically it deserves a 45 PE ratio, and basically from that they're getting a price target of around that 185 to 190 range that we're talking about. So we can jump back over here and again look at how that number equates to a percent return, and we know that that's around 80% because again it's very similar to this price target that we kind of projected based off the PE ratio. So overall, I haven't bought any PayPal stock, it still kind of worries me. The biggest worry that I have with it is that it's not basically a top two player in its industry. I would argue that Visa and MasterCard are number one and number two, and that PayPal is a number three. And there is still a lot of growth that can kind of go forward with PayPal, and that's one of the upsides. But right now, it's just kind of sitting there in the back of my mind as a potential buy in the future. But as of right now, I haven't purchased any stock of PayPal. So overall, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Otherwise, have a wonderful rest of your day.